David Williams joins us, investor and forecaster at PageTrader, to help us sort through it all. David, I wanted to begin with crude. First and foremost, the run-up we saw last week, last month. The last few weeks, basically, exactly what the bulls have been looking for.
Yeah, the bulls are very happy with crude oil. I can tell you that. We have a number of constantly changing and shifting world conditions, which continue to impact on the fundamental level the crude oil market. For example, yesterday, crude oil prices closed down about 1% to a one-week low as this hurricane, I think Beryl, shut off the U.S. refineries and ports along the Gulf of Mexico. That's a new piece in the whole puzzle, and it's a constantly shifting thing. As you know, the hurricane, I think, hit Texas with very strong winds, heavy rain, and a lot of flights were canceled. 2.7 million homes went without power. Many people may not realize what a real storm this really has been. There's also, countering that, there's possible a ceasefire deal potentially working on in Gaza, which would help reduce the continuing concerns, the ongoing concerns about a global crude supply disruption.
I like that because it does seem like the ceasefire deal started to break down a little bit over the last couple weeks. Last week, I feel like that's what sparked that rally into those upper levels. Also, probably brought about by the hurricane, which got discounted initially. That's always kind of a weird situation, a complex environment dynamic when you're talking about impact on prices, because I feel like when you initially hear of it, it's kind of tied to destruction it could create, right, in terms of the impact on the refiners and some of the facilities. But then you also, to your point, you talk about the demand destruction, right, the shut-ins and the flights that get canceled. So that kind of helps balance things out over the long haul, I feel like.
Yeah, and we had similar things, Ben. It's a good point. When we saw the war break out in Israel, Palestine, and so on. And a lot of people felt and were surprised that crude oil did not respond to that in a typical fashion. Just as, like you said, a lot of people would have thought crude would have been dramatically higher, and they actually were pushing and testing very important support levels during that period.
You could argue the same thing with the OPEC most recent announcement of production cuts, right? Kind of a counterintuitive move on the short term. But the longer term, when you look at price, we're still hanging out just shy of those April highs up around 87.
Yeah, we are close to that. And it's going to be interesting to see how crude handles itself. As you know, our ongoing forecast for crude oil has been that crude would stay above the $70 level on a monthly. And it has on a closing monthly basis, and then advance to $90 to $91 as in the second half of this year. We're in the second half now, possibly as early as the third quarter. So one thing I would want to say is that if some world events were to come about where we were to get back below $70, like on a monthly closing basis, crude would have a substantial decline under those conditions, particularly if that occurred in the third quarter. We're not forecasting that is going to occur, but I always like to lay out what the scenario would be if we were wrong. And I think traders need to know what things would look like if they were wrong. It's one thing just to say, well, I'll get out of the market, but it's very helpful to have another forecast for what would happen if your original scenario wasn't going to be correct.
Very, very important. I would agree. Let's take a real quick look at a chart. I've got a 60-minute candle queued up. We've started to come off those highs from 84.50 last week. We're talking about $3 almost off that high. Still holding above a key area here, though. I've got around that 81.50 level. I just wanted to show you where we are. Look at, on the bigger picture, the daily. I mentioned those April highs. Here's that around 87. And David, we've been arguing for a while, crude relatively contained and somewhat range bound. I like the technical breakdown, but just real quick, another funny thought on the fundamentals. I'm reminded of about 2 years ago, I think it was September of 2020, as far as I remember, the Saudi, or 2022, the Saudi energy minister talking about warning the shorts, right? He was saying they're going to be ouching or they're going to be feeling some pain. Again, we're significantly higher than those levels. That was kind of a key. I feel like next time that you hear that from the Saudi energy minister, take that to heart.
Yeah, it is interesting when public officials come out, whether it's in our country or in another country, to try to manipulate markets or to scare speculators. Honestly, it hasn't got a good history of working out. It may work out in the very short term, but generally speaking, the people with egg on their face are not usually the market technicians, forecasters, and so on. It's the people trying to manipulate it through governmental statements and policies and so on. It hasn't worked well in the history of man. I remember, going back, if I can just say, I remember when I think 6 or 7 governments got together to try to prop up the Japanese yen in the 90s. And the Japanese yen broke right through those levels and just continued to decline in a more historic manner. So it almost is exponential. The more people that come out from the government trying to make things happen the way they want to, in so many cases, that's exactly the opposite of what happens ultimately.
Yeah, I feel like the market's kind of like my dog, right? It's going to get its way at some point or the other. It's just a matter of how much we fight it. Talk to me a little bit about any other markets you're watching. We've mentioned and been kind of dwelling on the indices, new all-time highs there, the historic levels, and it's tough to kind of pick areas to focus on when you're into uncharted territory, I feel like.
Yeah, so Ben, the S&P has been and continues to be in a very, very strong position. Normally, without all of these features that we have surrounding the market right now, one of them being the election cycle that we're in, another one being just the technical condition of the markets. Without the usual, or if the market was in a more usual condition, we would expect July to be back down in the 54.30 to 54.10 levels, still in an uptrend, but still coming back to test those levels. I will say this, the fact that they're not down there and that we're in July means the market's in an unusually powerful position. So I do want to say, just for your listeners and just something that we're doing, if the market continues to close daily and weekly above S&P September contract above 55.53, about 100 points lower, it stays in a much stronger position. But if we did get a weekly close below 55.53, we believe the market would then reassert its natural July position, which would be down at 54.30 to 54.10. We're not forecasting that it is going to break 55.53, but again, just in case it does, I think it's a good idea to know what that would imply, and that would imply that we would go down even later in July, if it did happen in July, and we would test 54.30 to 54.10. As it stands, we believe the market, as it is right now, above 55.53, we're forecasting that the market's going to be up at 57.30 and even 57.85 to 5800 during the second half of 2024, and at the very latest, at the earliest, very early in 2025. So we're very bullish on the S&P. Had the market gone down in July, or if it still does, we think the market's going to firm up in that 5400 area, and it's still going to reverse higher and still make this year a very powerful year. So we're bullish on the market, but again, that is where we think the market gets weaker, is below 55.53.
You are not alone, that's for sure, as we again make history here this morning, overnight up to, well, we're talking again historic levels. The high still holding right now at that 56.40 level, but we're only about 6 points off that. And I like the levels you bring to our attention, because earlier in the show I was talking about 55.50, a key area, 54.40 being a key area that we've established on this way up, areas where the market's consolidated. David, appreciate you joining us, sharing part of your Tuesday morning with us here on the Schwab Network. It's our pleasure. David Williams, investor and forecaster at PageTrader.